Welcome to this explainer, where we are literally jumping into the ring with TKO Group Holdings to unpack their monster Q1 2026 financial results. If you follow the sports and entertainment landscape at all, you already know TKO is an absolute heavyweight. And man, their latest earnings report, it really backs that up. Today, we're going to break down exactly how they pulled these numbers off, where all this cash is actually flowing from, and honestly, what it all means for the company's future. All right, here's our roadmap for today's explainer. 1. The TKO Powerhouse. 2. Q1 2026 earnings knockout. 3. Segment breakdown. 4. Capital return program. And finally, 5. Wall Street's verdict. Let's get right into it.
Section 1. The TKO Powerhouse.
So TKO was originally formed by mashing up the UFC and WWE, right? But now, operating right alongside the massive IMG and On Location businesses, they've completely cemented themselves as a premium sports and entertainment IP powerhouse. I mean, we aren't just talking about putting on a few fights or wrestling matches here. They are controlling a massive global portfolio of live events, media rights, and high-end hospitality. It's basically a unified machine built to capture audience attention all over the world. And that powerhouse status? Well, it's perfectly illustrated by their top line. Just look at this figure. Nearly $1.6 billion in revenue for the first quarter of 2026 alone. $1.6 billion! That is a massive number, representing a 26% jump over the exact same period last year. But, revenue is really only part of the story. We need to see how efficiently they're actually turning those sales into bottom-line profit.
Which brings us to Section 2, Q1 2026 earnings knockout.
Okay, what's really fascinating here is the incredible year-over-year growth literally across the board. You can see the revenue jump of 26%, that's up over $328 million. But look down at the bottom line. Net income jumped a staggering 51% to nearly $250 million. And their adjusted EBITDA, which helps us gauge true operational profitability by stripping out some of those non-cash and tax variables, that surged 32% to almost $550 million. Actually, their adjusted EBITDA margin even ticked up to 34% from 33%. Long story short, they're making way more money and they're keeping a lot more of it too. And honestly, that kind of performance sets the stage perfectly for this quote. Executive Chair and CEO Ariel Emanuel's excitement is clearly backed by the hard data here. He notes that the momentum across every part of the business is fueling major conviction in the company's long-term value. And hey, that conviction isn't just cheap talk. It's backed up by a brand new $1 billion share repurchase authorization, which we're going to unpack in just a minute. Section 3, Segment Breakdown. Now, looking at how this revenue is actually distributed might surprise some of you. While UFC and WWE are definitely the household names, pulling in $401 million and $475 million respectively, it's actually the newly integrated IMG segment that's taking the largest slice of the pie right now. Yeah, they pulled in over $655 million this quarter alone. That's a huge piece of the puzzle. So here's exactly why these segments are just humming right now. Each one had a really specific catalyst this quarter. IMG's unbelievable growth of over $179 million, that was heavily driven by massive hospitality sales through On Location for the 2026 Milano Cortina Olympics. Then you've got WWE seeing an $84 million bump, fueled by incredibly lucrative site fees for the Royal Rumble over in Saudi Arabia, plus those new media rights deals with Netflix and ESPN. And meanwhile, UFC added over $41 million, driven in a big way by their brand new distribution agreement with Paramount that kicked off in January. It's a totally diversified attack. And they absolutely aren't stopping there. President and COO Mark Shapiro points out that this momentum isn't slowing down anytime soon. He highlights the sheer durability of their premium IP and looks ahead to some massive upcoming summer events. I mean, get this, UFC Freedom 250 at the White House and On Location's FIFA World Cup partnership. These aren't just sporting events anymore. They are massive cultural moments purposely designed to drive audience growth and obviously revenue. All right, let's move to Section 4, Capital Return Program. If you are an investor, this is absolutely a crucial takeaway for you. TKO is aggressively, and I mean aggressively, returning capital to equity holders. They just authorized an additional $1 billion share repurchase program, and that is on top of an already existing $2 billion program. In March alone, they executed an $800 million accelerated share repurchase. Put that together with a $150 million quarterly cash dividend, paying out 78 cents per share, and management is basically screaming, we have way more cash than we need to run operations, and we firmly believe our own stock is a fantastic investment. Section 5, Wall Street's verdict. Okay, so here is the current landscape.
TKO boasts a massive market cap of over $35.6 billion, with the stock recently trading around that $187 mark. But analysts, they see some serious upside here. While the consensus target sits at about $195, firms like BTIG recently set a target of $237, and TD Cowen has a high target all the way up at $250. Wall Street is looking at these massive cash flows and this premium IP, and they are clearly modeling for continued rapid expansion.
And this optimism from the street is largely anchored by management's own expectations. TKO is fully reaffirming their full-year guidance for 2026. Get a load of this. They are projecting upwards of $5.775 billion in total revenue by year's end and up to $2.29 billion in adjusted EBITDA. This is definitely not a company just crossing their fingers and hoping for a good year. They're locking in these forecasts based on secured media rights, highly scalable financial incentives, and super high demand for their live events. Which really leaves us with this final thought. When you consider the absolute durability of their premium IP, their incredibly aggressive return of capital to shareholders, and a literal war chest of cash, we have to ask the big question. Will this summer's unprecedented, high-profile events, from the White House to the FIFA World Cup, be the ultimate catalyst that pushes TKO past even Wall Street's highest expectations? Thank you so much for joining me for this explainer. Definitely keep a close eye on TKO. This story is far from over.